Welcome back, folks. Glad to have you here again. Now, before we jump into the heart of today's discussion, let me remind you real quick. If you've been enjoying these deep dives, make sure you subscribe, drop a like, and hit the notification bell so you never miss when we break down what's happening in crypto. Because let's be real, there's a lot happening, and sometimes the mainstream media won't give you the real picture. We will. All right, today, we're zooming in on two very interesting forces in the crypto world: Ethereum, ETH, the old guard of smart contracts, and Stellar, XLM, the quiet but powerful mover in the payments world. Both of these projects are at crossroads right now. Both are showing signs of strength, but also facing unique challenges in 2025 that could decide how they shape the next decade of blockchain adoption. So here's the plan for this conversation. We're not going to do a stiff lecture. Instead, think of this as you pulling up a chair, grabbing your coffee, and listening in on a chat between two friends who happen to be obsessed with crypto. We're going to break it down, the market moves, the real-world adoption stories, the behind-the-scenes developments that don't always make the headlines but do shape your portfolio. And we're going to talk about what this all means for you, the ETH holder, the XLM believer, or even the curious newcomer who's been watching from the sidelines wondering, is now the time to jump in? So, let's start by framing the stage. Why Ethereum and Stellar? Ethereum, at this point, is almost like the New York City of crypto. It's been around for years. It's been through its share of storms. But it remains the place where innovation wants to live. DeFi, NFTs, DAOs, you name it, most of it was born or built on Ethereum. And even though we've seen competitors come and go, whether it's Solana's speed race, Cardano's methodical approach, or newer chains trying to grab attention, Ethereum still commands respect. It's still the platform institutions look to first when experimenting with blockchain. And in 2025, with Layer 2 scaling taking off, Ethereum feels less like a congested old city and more like a modern hub that's getting a massive upgrade. Now Stellar, that's a different story. If Ethereum is the bustling city, Stellar is like the international airport quietly connecting people across the globe. It doesn't always grab flashy headlines, but it's solving a problem so fundamental that it almost flies under the radar, moving money cheaply and quickly across borders. And that's a trillion-dollar industry. Think about the migrant workers sending remittances back home. Think about small businesses trying to pay partners overseas without drowning in fees. Think about how slow and clunky SWIFT transfers can be. That's Stellar's arena. And in 2025, with the world economy still shaky, currencies devaluing in places like Argentina, Nigeria, and Turkey, projects like Stellar are becoming not just useful, but essential. Because when your local bank limits withdrawals or your national currency loses half its value overnight, having a tool like XLM isn't just about speculation. It's about survival. So we're setting up this conversation with those two poles: Ethereum, the powerhouse of decentralized applications, and Stellar, the bridge for real-world money movement. Now let me ask you a question, because this is how I like to frame it. What do these two have in common, and why should we talk about them together? On the surface, they feel like opposites, Ethereum being this experimental lab for Web3 innovation, and Stellar being this almost boring but practical money mover. But if you zoom out, they're both tackling one of the biggest challenges of our time. How do we rebuild the financial system so it works for everyone, not just the privileged few? Ethereum is saying, let's create a parallel system where anyone can plug in and build their own tools, finance, art, identity, you name it. Stellar is saying, let's fix the pipes of money so that everyday people, especially those left behind by traditional banking, can actually participate in that new system. Together, they're not in competition. They're part of the same bigger puzzle. And here's where it gets spicy. 2025 has been wild already. Ethereum just saw its ETF approval in January, and the inflows have been stronger than expected. We're seeing institutional adoption, hedge funds allocating, even pension funds quietly dipping their toes. At the same time, Stellar just announced a major pilot project with the UNDP, testing cross-border disbursements of aid in digital form. That's real-world impact. That's not just traders on a chart. That's families in need receiving help faster because of blockchain rails. And that's where we'll take this discussion next. We'll dive into the current market environment for both ETH and XLM. We'll talk about price, yes, but more importantly, about what's underneath the price. Because if you only focus on the charts, you'll miss the bigger story. And in crypto, the bigger story is what creates wealth over the long term. So buckle up, we're going deep. And by the time we're done, I want you walking away with not just knowledge, but clarity. Clarity about where ETH and XLM stand today, clarity about the risks, and clarity about why, despite all the volatility, despite all the noise, these projects are still worth your attention in 2025. So, let's start with Ethereum. Ethereum ETH, the evolving giant. Ethereum right now reminds me of that artist who blew up young, got copied by everyone, but still manages to reinvent themselves every few years. It's been written off so many times. Gas fees too high, too slow. Competitors like Solana, Avalanche, Near, even HBAR were supposed to kill Ethereum. Yet here we are, ETH still the second largest crypto by market cap, still the platform institutions trust when they dip into DeFi. Think back, proof of stake in 2022. The merge was a huge milestone. Then we got Shanghai in 2023, unlocking staked ETH. And now in 2025, Layer 2 adoption is off the charts. Arbitrum, Optimism, ZK Sync, they've essentially become the pressure valves, taking on the transaction load that Ethereum couldn't handle directly. And the cool part? ETH benefits anyway, because gas fees on Layer 2 still flow back down to the Ethereum mainnet. So Ethereum is like the city that built subways. The streets were too crowded, traffic was insane, but instead of abandoning the city, they dug underground, built new lines, and suddenly everyone could move faster. That's what L2S have done. Let's ground this in some numbers for people listening. As of this quarter, ETH is trading around the $4,200 range. That's after dipping to about $3,200 earlier this year when macro fears hit the market. But here's what's more important than price. TVL, total value locked, is sitting at $92 billion across DeFi protocols, and roughly 70% of that is on Ethereum and its L2 ecosystem. So even though we've had newer chains pop up, Ethereum is still holding the lion's share of activity. And then you add in the ETF flows. Since the SEC gave the green light for Ethereum ETFs back in January, we've seen roughly $14 billion pour in. That's not retail hype. That's institutional capital. And that's a game changer, because institutions move slow. They don't ape into meme coins. They build strategies for decades. And if they're allocating into ETH even just 1% of a portfolio, that speaks volumes. It gives Ethereum the sticky demand that isn't going to vanish overnight. But let's be real, challenges remain. Now, it's not all roses. We have to be honest about Ethereum's weak points. Gas fees, while lower thanks to L2S, are still an issue for newcomers. I mean, if you're a kid in Detroit or New York trying to make your first NFT trade, a $5 fee is still a barrier. And the UX? Still clunky. MetaMask has improved, but we're not at iPhone levels of simplicity yet. Then there's regulation. The SEC still hasn't fully settled the "is ETH a security?" debate. The ETF approval was a big step, but we can't ignore the fact that regulators could tighten the screws at any point. Plus, Ethereum's decentralization gets questioned because staking is concentrated. Lido alone controls more than 30% of staked ETH. That's a risk. Ethereum has the crown, but it also has a target on its back, which is why the constant innovation matters so much. If ETH keeps moving, like with danksharding on the horizon, it can stay ahead. If it stalls, competitors will take bigger bites. Stellar, XLM, the quiet workhorse. All right, let's pivot to Stellar. And I love this part because Stellar has a completely different energy than Ethereum. ETH is loud, experimental, buzzy. Stellar is quiet, almost boring, but in the best way. You don't see Stellar dominating crypto Twitter. You don't see influencers pumping XLM with crazy price calls. But when you dig into the fundamentals, you realize Stellar has been solving real-world problems for years. And in 2025, with global financial uncertainty, those solutions matter more than ever. Look at what Stellar has been doing with MoneyGram. That partnership turned Stellar into a bridge between cash and crypto for millions of people. You can walk into a MoneyGram location, deposit physical cash, and it gets converted into digital assets via the Stellar network. Or the reverse, you can cash out digital dollars into fiat instantly. That's massive. Because let's be honest, most people on this planet don't live in a fully digital economy. They live in a cash economy. Stellar figured out how to connect the two. And that's just one example. They're working with UN agencies to distribute aid faster. They've partnered with Circle to move USDC across borders. This isn't hype, it's infrastructure. Stellar now processes close to 10 million transactions per day. Fees are fractions of a cent settlement time, 3 to 5 seconds. It's not flashy, but it's reliable. And reliability is what builds trust. So let's give the snapshot. XLM is trading around 23 cents right now. It's had a slow grind up this year, not a moonshot, but steady growth. Market cap is hovering around $6 billion. Now, compared to Ethereum, that feels tiny. But here's the perspective. Stellar was designed to be lean. It's not about massive speculation. It's about utility. And as adoption grows, demand for XLM grows with it. And don't forget, XLM supply dynamics are different. They burned 50% of supply back in 2019. Today, there's around 25 billion tokens in circulation. Compare that to other projects still inflating supply, and you see why Stellar has this long-term sustainability baked in. Of course, we've got to be fair. Stellar has its own hurdles. One big one is awareness. Outside the hardcore crypto community, most people don't know what Stellar is. Ethereum has brand recognition. Bitcoin has brand recognition. Stellar? Not so much. Then there's competition. Ripple XRP operates in a similar space, cross-border payments. And Ripple has more visibility, more hype, and deeper corporate ties. Stellar has carved its niche, but scaling that up is still a question mark. And finally, regulation again. Stellar works with money transmitters, governments, NGOs, that's great. But it also means they're exposed to compliance pressures. If regulators decide to clamp down harder on stablecoin usage, Stellar could feel that impact directly. You know what's funny? People often try to pit ETH and XLM against each other. But in reality, they're not competing. They're solving different problems. Ethereum is the world computer. Stellar is the payment rail. And in the future, I think they'll actually complement each other. Imagine someone in Argentina receiving aid in USDC on Stellar, cashing out locally, then later deciding to stake that same USDC in a DeFi protocol built on Ethereum. One rail feeds into the other. That's the bigger picture. Crypto doesn't have to be tribal. It's an ecosystem, and the projects that survive are the ones that find ways to integrate into that ecosystem instead of fighting for scraps. So let's dive right into it. Ethereum and Stellar. Two very different beasts, but in a way, they're both chasing the same vision. Moving value faster, more transparently, and without the nonsense of legacy systems. But the paths they've taken couldn't be more different. On one side, you've got Ethereum, arguably the city of crypto. It's massive, it's bustling, it's experimental. If Ethereum were a city, it'd be like New York or Tokyo. Full of skyscrapers, innovation hubs, traffic jams, sometimes even blackouts, but it's where everything important happens. And then you've got Stellar. Not so much a city, more like a highway system. It's not about hosting a million apps, it's about getting people and businesses from point A to point B quickly, cheaply, and reliably. Now, let's zoom out to 2030. I always like to paint this picture for people. Imagine a world where your paycheck, your mortgage, your international wire transfer, and even your airline reward miles are all tokenized. Some of that will live on private blockchains, sure. But when those private systems need to settle with each other, guess what they'll use? Public blockchains. Ethereum will be the high-value settlement layer. Stellar will be the cross-border consumer payment layer. And you know who else sees this? The Bank for International Settlements, BIS. In their January 2025 working paper, they actually outlined a hybrid future where CBDCs operate on national rails but interconnect through neutral settlement layers. The examples they gave: Ethereum for tokenized assets, Stellar for remittances. That's not a fringe crypto blog, that's the BIS, the central bank of central banks. So let me tie this back to the idea of crashes or traps. Every time ETH or XLM dips, the narrative from retail is always the same. See, it's over. It's too volatile. Institutions won't touch this. But if you look at the actual institutional behavior, it's the opposite. They're buying, they're piloting, they're integrating. Volatility to them isn't a death sentence. It's just noise. And that's the part retail investors consistently miss. Here's another anecdote. In Kenya, mobile money is king. M-Pesa runs the economy. But guess what? M-Pesa just announced in April 2025 they're working on interoperability pilots with blockchain partners. And Stellar's name came up in a Reuters piece. If Stellar becomes the bridge for M-Pesa remittances out of Africa, do you realize how big that is? We're talking billions of dollars a year in flows. That's not just adoption, that's lifeblood infrastructure. Ethereum has its own version of this. Look at tokenized carbon credits. The UN Climate Initiative launched a pilot earlier this year with a consortium of energy companies, and they chose Ethereum rollups as the underlying infrastructure. That's not about speculation. That's about carbon compliance markets worth billions being recorded on-chain. And if you think about 2030, when carbon neutrality goals are going to be under maximum pressure, Ethereum isn't just going to be the finance chain. It's going to be the climate compliance chain too. So yeah, when people ask me, where do you see ETH and XLM by 2030? I don't just throw out numbers. I talk about inevitability. ETH becomes the rails for the financial system. XLM becomes the invisible plumbing for remittances and CBDC transfers. And when that reality sets in, the prices will follow, because they'll reflect usage, not hype. And here's my message to anyone listening right now. Don't get shaken out. Crashes are part of the story, but they're not the story. The real story is the world quietly moving onto these rails. You want proof? Look at the World Bank, BIS, IMF, and major banks. They're already building. You think they care about ETH dropping 10% last week? Not at all. They're thinking in decades, not days. So if you're holding ETH, you're holding a piece of the future financial infrastructure. If you're holding XLM, you're holding a piece of the future global money transfer system. And in my book, that's worth writing out every crash and every headline. So here's the bottom line. Every cycle we've had doubters. In 2013, it was Bitcoin's a fad. In 2017, it was Ethereum is just for ICO scams. In 2021, it was NFTs are a bubble. And now in 2025, people still say, crypto is too volatile. It'll never last. But here's what history teaches us. Every single cycle, the tech gets stronger, the use cases get clearer, and the adoption gets deeper. The noise fades, the builders keep building, and the world quietly moves one step closer to being fully on-chain. Ethereum and Stellar are proof of that. Ethereum isn't just another chain anymore. It's the rails for tokenized bonds, carbon credits, and institutional settlements. Stellar isn't just another payments network. It's becoming the lifeline for remittances, CBDCs, and cross-border money transfers. You don't get this kind of adoption and recognition by accident. You get it because the technology works, it solves real problems, and it keeps evolving. Whether it's the European Central Bank name-dropping Stellar or BlackRock building tokenized funds on Ethereum, these aren't hypotheticals. These are happening right now in real time in 2025. So when the markets crash, and they will again, you've got two choices. You can panic, sell, and let go of assets that are literally becoming the plumbing of the future economy. Or you can zoom out, recognize the once-in-a-lifetime infrastructure shift that's happening, and hold your ground. Because here's the truth. By 2030, nobody is going to be debating whether blockchains matter. The only question will be, did you position yourself early, or did you wait until it was obvious? So my call to action is simple. Do your own research. Read the reports from Van Eck, Messari, BIS, World Bank. Look at what the institutions are doing, not just what Twitter is saying. And then make your move with clarity, not fear. Ethereum and Stellar aren't maybe projects. They're inevitable infrastructure. And if you understand that, then every crash is just another chance to strengthen your position before the rest of the world catches up. So don't just watch history happen. Be part of it. And listen, if this breakdown gave you some clarity on where Ethereum and Stellar are really heading, don't just click away. Hit that like button,